Hey guys, what's up? How's it going? Robin here, and in today's video, I'm going to be going over my stock portfolio, or all my stock portfolios for the month of February 2020. So in this video, I'm basically going to go over my totals. I'm going to give my thoughts about what's going on, kind of thing, and show you guys how I'm doing for my different portfolios. So first of all, we're going to cover my main portfolio in Wealthsimple Invest here, which is a robo-advisor. This is where I keep my main portfolio. Then we'll go over to my dividend investing portfolio, and then we'll go into my real estate REIT portfolio. Yeah, we'll start with this one first, since this is where the bulk of my money is, and there's a lot to talk about because a lot has happened in the market over the past month or so. So I'm gonna go over that, and yeah, and if you guys want to follow along, I've had some videos in the past, like I had my January update. I'll link to that in the description of this video. You guys can check out that video as well and compare it to this month, which is going to be a lot different because a lot of things have happened. So this is my portfolio. We're sitting at a gain of, or an overall balance of $42,938. So basically $33,000 in our portfolio with a gain of $324. Now this went down a lot over the past month or so because stocks took a big dip, and then they kind of went up a little bit. So initially we were down about $600 when it hit its lowest dip, but then it kind of went up, and now we're up a little bit again. And I did buy a bunch of stocks when the dip did go down, because I wanted to kind of get them while they're cheap, right, kind of thing. So it's hard to say if they're going to go back down or if they're going to go up. Nobody really knows, but I would say just keep investing, keep doing your regular thing, and hopefully, they kind of go up as time goes on. But if they do go down, you can still get some stocks at a cheap price, so that's good as well. This is a tax-free savings account, high-risk account, and you can see once again, here's the returns. Overall percentage, we're sitting at about, it says negative 0.1%, but I think it's a little bit delayed. If we go into the actual portfolio here, we can look at the holdings. So we have some different holdings here. We have a US, which is VTI, 22%. We have international equities, XEF, EEMV, which is emerging markets, ACWV, which is global, and then XIC, which is Canadian, and then VUS, which is another US fund. And then we have some government bonds here at the bottom. Our top performance for U.S. stocks is now sitting at 0.7%, so they went up a little bit. Foreign stocks are still pretty down. This XEF is mostly foreign. It's a lot of like the Asian companies and stuff like that. So once again, those took a big hit. And then EEMV is once again like those emerging markets, so it's a lot of stuff out of China and whatnot. So that obviously took a big dive, sitting at negative 5.5%. And then ACWV was a little bit of everything. It's globally, and this is kind of sitting about neutral kind of thing. And then we have XIC, which is Canadian stocks, which have took a little bit dive to a negative 1%. So you can see like the whole Corona thing that's going on, stuff like that. It's kind of pushed everything down. But some markets are starting to slowly recover, as I'd expect it would do. So that's basically our portfolio, and this is how many shares we have. As you can see, we're mostly invested into U.S. stocks, and I think that's a pretty good strategy because U.S. stocks have shown over time to increase the most in value, but we do have lots of diversification just in case, if let's say we took a big hit, or if the U.S. stocks are down for a little bit of time, at least we're kind of balanced overall. And you never know, because this portfolio is designed to basically last into the future and basically go into retirement. But who knows? We might be taking money out of it because we're aggressively investing at such a young age. Who knows? Like maybe 5 to 10 years from now, I might pull some income out of it. So I want kind of like it to be diversified, and I want it to basically be able to take money out anytime if we need to and not suffer big losses. So that's why this portfolio is so diversified. And I've used Wealthsimple Invest to do this because I started with a robo-advisor when I first started investing because I just didn't know anything, and it's been pretty solid, and I highly recommend you guys do the same. So if you are starting with investing, if you're brand new, check out Wealthsimple. I'll put a link in the description of this video. You guys can get $10,000 managed for free if you guys want to check that out. So that's my main account. Not doing too bad, a little bit of losses, but overall it looks like things have recovered a little bit. Now I'm going to jump into my dividend investing account. Now, if you guys don't follow the channel, I am doing a dividend investing case study where every single week we put money into a dividend investing portfolio, and this is on Wealthsimple Trade. So Wealthsimple Trade is an app that lets you trade stocks, and if you guys want, you can sign up to Wealthsimple Trade. I'll put a link as well. It's my affiliate link. You get $5 if you guys sign up and deposit. I think it's like $100 or something like that. But here's my Wealthsimple Trade account. This is my other portfolio, and we have about $1,000 here, and we're building this portfolio on a weekly basis. Every single week I published a video, and I'll link to that series if you guys want to check it out. We started completely from scratch, and we're trying to build a dividend basically portfolio up to 6 figures. So we're kind of working on that, but this is the portfolio, and you can see over the past day it's recovered quite a bit, up $21 in the past day. Over the past week we're still down $13. and if we go all time, we're still down 22, but I think when the markets did crash, we were down, I think, $60. So we have recovered quite a bit with this dividend portfolio, and you can see it's only $1,000, so it's still pretty small, but we're slowly growing it out. And here's the different stocks here. These are the main ETFs we have. So we have a little bit of everything, you know, US, international, Canadian, and then we have some different stocks here that people have been recommending that I've been buying, because I kind of take everybody's input and we kind of build the portfolio together. And I think that's a lot more fun to do it that way. So yeah, portfolio is doing pretty good overall. I didn't actually look up my one thing I should mention is my Wealth Simple Invest account didn't really have any dividends. So that's why I never really covered it. But we did receive some dividends in this portfolio, so I'm going to filter that. I'm going to go dividends and go done. And we can see here in February we got a VDY dividend of 27 cents, SHA dividend of 30 cents, XHD of 22, and XRE of 82 cents. So, you know, we started the portfolio in January, kind of late January, and we're just starting to get some dividend income. This is about roughly $1, I'd say, a little bit over $1, like $1.50 or something like that. So, you know, it's small at the start, but it's slowly growing up. And in comparison, I'll just look it up here. I'll check out the dividends here if you guys want. But this main portfolio, there isn't very many dividends. But in the end of March, we'll be getting a lot of dividends on this portfolio, and I will be covering that. So you can see in February 4th, we got a dividend from ZFL, which is a government bond, which is $6.48. And then we got a dividend of QTIP, which is another bond, $1.33. Our bonds only pay monthly dividends in this portfolio, but we do get the quarterly big dividends from the stocks and whatnot. So that's why I never really covered that much. But we need to go back into here, and you can see that these are the dividends that I get on a regular basis. And the other portfolio I've been building out is a real estate REIT portfolio. This is a brand new portfolio I want to kind of build up to once again get that passive income, because you never know, one day I do want to live off my stocks. And this is one, once again, I'm building on the channel. I do a weekly video. I kind of do this one at the end of the week, and this is an REIT portfolio. And this portfolio is built 100% out of real estate. So we're basically investing into real estate as if you were a landlord, but we're using stocks instead, since it's easier, it's cheaper, and we want to basically get that regular income coming in. So this portfolio is at 199. We're down 8 cents, and all time, looks like all time, yes, we are down 8 cents. So this portfolio didn't take that big of a hit in the drop, but we didn't really have anything invested at the time. And right now we're only holding XRE and VRE, which are two Canadian ETFs that are based out of real estate. So this portfolio, once again, it's pretty new, so nothing's really coming in. There's not really any dividend income, but the main purpose is to just get that regular income coming in, as with the dividend investing case study. So I just want to do this update to let you guys know how my stock's doing. My 3 different portfolios. Once again, I'm trying to diversify with this YouTube channel, and I'm trying to show you guys how to do that with these videos. So if you guys do enjoy these videos, remember to subscribe and hit that like button, because it does help out a lot. And it shows me that you guys like these videos and you find them valuable. But I hope you guys liked it. I hope you guys enjoyed it. If you guys have any questions about like my stocks, my portfolio, anything I do, feel free to do so in the comments. You know, let me know how you guys' portfolio did. Let me know what you're buying, that kind of stuff. I'll always like to hear you guys' comments that you guys leave. But anyways, I hope you guys enjoyed this video. I hope you guys found it helpful. And yeah, remember to subscribe and like the video if you enjoyed it. And I'll see you guys later.